Okay, Trustee Rose,
I am here.
Trustee Gianoli,
Here.
Trustee Carasali,
Here.
and Trustee Jay.
Present.
Okay, and you don't have to call Trustee Chaplin because she is not on the actual.
Oh, she is here, but I generally don't have to call the alternates, correct, Ann?
Exactly.
Correct.
Perfect.
Yeah, okay.
Okay, thank you. Do we have any public comment, Lori?
No public comment at this time.
Great, thank you. And then with that'll take us to item 3 for approval of the minutes from January the 12th. If anyone has any changes, questions, or requests, let me know. Otherwise, we'll entertain a motion.
Move to approve.
Richard J. Second it.
Any questions or discussion? All in favor?
Aye.
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 Any opposed? All right, well, the approval of the minutes passes unanimously. That was super exciting. And that brings us to 4.1, which is our board memo 2102-08, authorization for the president CEO to negotiate final terms and execute a 50-year ground lease on a 17,930 square foot fuel farm facility located on Rock Boulevard, south of Mill Street, commonly referred to as the GA East Fuel Farm, for an estimated contract value of $603,504 with Stellar Aviation of Reno Tahoe LLC. And I believe Aurora Ritter is going to do a presentation. Good morning, Aurora.
Good morning. Good morning, Chair Rose, trustees. Again, for the record, Aurora Ritter, Manager of Airport Economic Development. And I just wanted to quickly introduce that we should also have on the phone Brad Cost, who is the Chief Operating Officer of Stellar Aviation and is located here at the RNO location. So I'll just bring up my PowerPoint. Can everybody see that okay?
Yes.
Perfect. Okay, so the purpose of this item is to execute a fuel farm facility ground lease with Stellar Aviation that would help to implement the proposal submitted in response to the 2019 RNO General Aviation RFP. And it also supports strategic priority number 2, which is to encourage general aviation at both airports, and strategic priority number 5, which is financial diversification and growth. So this item ties back to the RNO GA RFP that was issued in January of 2019, which offered 5 parcels located on the east side of the airfield in their as-is condition for development of an FBO, MRO, hangars, and other general aviation facilities. The goal of that RFP was to select proposals that would best serve and enhance GA facilities, that would help implement the master plan, and that would encourage a competitive business environment on the airfield. The primary objectives were to add a second FBO to the airfield and to help facilitate the policy directive to relocate all the hangars onto the east side of the airfield. As a reminder, the project concept that Stellar Aviation proposed was to construct a GA campus on parcels A1 and A2, which is the photo here in the middle, that is to the north and the south of the existing Dassault MRO facility. And Stellar proposed a phased approach, which the first phase was to construct their FBO facilities and the associated apron to get them up and running. The second phase was a GA campus, which was going to include T hangars, box hangars, a community assembly building, an aircraft wash rack station, a fuel farm facility with a self-serve avgas station, and would help facilitate the expansion of Dassault. And would also, the third phase would be more of looking at what is missing with the existing construction and address it at that time. The RFP did also offer some existing facilities, RTA-owned facilities in a box hangar, an FBO location, and also the GA East Fuel Farm. And in December of 2019, the board did approve the president and CEO to negotiate a ground lease with some development options, an interim FBO lease for the existing facilities, and an interim fuel farm license. So speaking about the GA East Fuel Farm, so what was in Stellar's proposal was just to utilize the site for a 5-year term. Their plan was to construct a new Jet A and avgas fuel facility and a self-serve avgas island in phase 2 of their proposal. Part of the RFP mentioned that anybody who was wanting to use this GA's fuel farm would have to perform a full assessment on the facility because it had not been used in 10 years and would also need to get approvals by local permitting agencies. Stellar Aviation did that. They also did a phase 1 and phase 2 environmental assessment. And fortunately, there was no recognized environmental conditions identified through the environmental assessments, but there were some findings in the assessment of the equipment. So it was determined that because the condition that the condition was in, the equipment was in complete disrepair and was not operational in its current condition. And so it required quite a bit of repairs just to get it up and running to even be able to be approved and get the permitting by the local agencies. So Stellar Aviation collected the repairs, some estimates, and it was $80,000 in repairs just to be able to flow some fuel through there. There's also a possibility that once they get that piece up and running, one of the tanks could need to be replaced. And if that's the case, they'd be looking at about at least another $250,000 for the tank replacement. So the total revenue to the RTAA for the initial 5-year term was $48,000. So looking at the cost to make the repairs, the potential need to have to replace a tank if it comes to that, and the ground or the rent for the 5-year term, Stellar Aviation really started to question if that was the right move, how viable it was for them to be able to do this on a short term and then still have to build a new fuel farm facility in phase 2. And just to show their commitment, they realized with getting the leases and the interim facilities that they needed to provide fuel on the airfield right away. So Stellar Aviation, with the RTA approval, has been using a truck-to-truck fuel transfer operation, which basically just entails the sole use of fuel trucks to receive, store, and dispense fuel. It's meant to be just a short-term answer to a problem. Stellar is accumulating extra costs in the form of having to rent these fuel trucks and still pay the rent on the facility. And also from an RTA perspective, it's not our preferred method because of everything going in and out of a fuel truck. There is a potential for a higher risk operation in terms of the environmental concerns. So Stellar and the RTAA started discussing potential options that would allow Stellar to utilize this fuel farm on a longer term basis and would make more sense for them to put in this investment into the property. So as mentioned, the investment would be $80,000 at a minimum that would go into these improvements. The term that we were talking about is 50 years, which would tie into the ground lease that was just signed, the development lease for their other facilities. The rent, we did get an appraisal to determine what the rent on the ground would be. And the appraisal did incorporate the assessment findings, and because the repairs that were needed and the equipment not being in usable condition, the appraisal concluded that based on the condition, the existing equipment and improvements no longer contributed to the value of the site. And so the site was actually appraised as vacant land. So that is why you see here that the rent rate is just on the land, on the ground rent. So it's 68 cents per square foot per year, which equates to about $12,192 per year with a 50-year total of $603,000. Rent credit, because they're putting in some money to improve an RTA-owned facility, the proposed rent credit of $6,096, which is equivalent to just 6 months of rent. The lease and rent credit would commence upon execution. The rental rate adjustments would be an annual CPI increase with a 3% cap, and we would do a mark-to-market appraisal every 10 years. There would also be a midterm refurbishment program, not less than 5% of the value of the original investment that Stellar would need to put in to this property further down the line. And I think it's really important to note that Stellar is intending on building every other component of their proposal in phase 2, which would be all the hangars, the self-serve avgas island, the aircraft wash rack facility, and the community assembly building. And so just a little bit information about Stellar. They are currently an FBO at RNO. As of February 1st, they are now actually handling the T-hangar management for the airport authority. They've been very instrumental in helping us attract tenants and businesses such as JSX. As mentioned before, we have executed their phase 1 development lease, and they are making good strides in moving that forward. They've hired contractors, consultants for the development plans and the environmental submissions, and they anticipate they'll have the FAA submittal for that first phase 1 development by the end of March 2021. So the fiscal impact, this table outlines the estimated minimum revenue broken up by fiscal year. So the 50-year minimum revenue to the RTA is estimated to be at $603,000. This estimate does include the rent credit that we're proposing for the $6,000, but it does not include the annual CPI or the 10-year fair market value adjustment. And with that, it is hereby moved to approve authorization for the president and CEO to negotiate final terms and execute a 50-year ground lease on a 17,930 square foot fuel farm facility located on Rock Boulevard, south of Mill Street, commonly referred to as GA East Fuel Farm, for an estimated contract value of $603 and $504 with Stellar Aviation of Reno Tahoe LLC. And Madam Chair, that
Thank you
concludes
very
my
much.
presentation. I'm happy to answer any questions.
Thank you, Aurora. Thank you very much. Do any of the committee members have any questions or comments?
I was just going to say, Richard J. here, I was just going to say, great presentation, very detailed, working with Stellar on the COC, great partners to work with, very detail oriented, so I've really enjoyed working with them, and I know a number of our tenants, not COC, I'm sorry, users group, I've been very happy. So that's all I was going to say, but thank you, Aurora, very good job.
Thank you.
Yeah, I was actually on the special committee when we did this the first time, and it's very exciting. Go ahead, Lisa.
No, I
Trustee
just was
Janola.
going to mention too that I think they've been great partners to this point, and look forward to the partnership going on to this level. And great job, Aurora. Thank you so much.
Thank you.
Darren, I'd love to hear your thoughts on this project, if you have any.
Oh, thank you, Madam Chair. As far as this particular component of it goes, I certainly support going this direction. The truck to truck is not something any airport wants to be doing very long. And so having Stellar take this down and take responsibility for it is good for all of us. As far as the bigger Stellar investment, Brad is on with us, I think, and quite frankly, I'm licking my chops. I mean, this is the sort of investment that any airport would love to have. And it's better for our general aviation community. It's going to make us even more attractive for aircraft and aircraft owners coming out of California, quite frankly. It'll generate additional traffic for this airport. And Stellar has, as you all noted, been a great partner, and great partnerships in the FBO business are honestly oftentimes hard to find. It's a tough business, and lots of companies struggle at this. And Stellar has made an investment here and a big long-term commitment. So just hats off to Aurora and Tina and Brad and the partnership. And, we're also in some conversations around future potential opportunities at Stead Airport too. So as their business grows, I hope we can continue growing our business relationship. But what they're going to do here at RNO is really exciting. So I appreciate the board's support on this piece of it. Thank you, Madam
It is
Chair.
very, very exciting. I would love to hear a motion if someone has one.
Move to approve, Nat. This is Nat.
Richard J, second. Oh, go ahead, Lisa, it's yours.
No, you're fine, Richard. Go ahead.
We have a motion to approve by trustee Carusel and a second by trustee Jay. Is there any further discussion? All in favor?
Aye.
Any opposed? That motion carries unanimously. Thank you again, Aurora.
Thank you.
That will take us to number 5, items for discussion and possible action. And I believe we're going to have a mid-year budget review by Alex Kovacs. I don't actually see Alex on the.
I'm promoting him now. I
screen.
promoted him once, but he ended up, there he is.
No worries, we'll wait.
He's here.
Alex, whenever you are ready, we are waiting for your mid-year budget review.
Alex, if you need to unmute if you're talking.
Good morning. Can you all hear me?
Good morning.
Good
We
morning,
can
Chair
hear you
Rose,
now, Alex.
trustees. Yes, for the record, Alex Kovacs, Manager of Finance, with a presentation on the current mid-year. Can you please confirm that you can see my presentation?
We can see it, Alex. Thank you.
Perfect. Thank you. The RTA's budget process is governed by the Local Government Budget Act. Our operating budget was adopted by the board on May 21st, 2020. Any change to the overall adopted budget has to be done via board action. I would also like to let you know at this point that we don't have a proposed budget augmentation at this time. It looks like our revenues are doing substantially better than anticipated, and our overall operating expenses and capital project expenses are performing below budget. We have a mid-year budget review when our internal staff has an opportunity to identify any unanticipated items, new opportunities, or any new or realigned priorities that the board may direct us to do. Our agreement with the signatory airlines requires also a mid-year airline review when we have an opportunity to change the proposed rates and charges. We had a meeting with the airlines, with the signatory airlines on December 17th, and there were no changes to the current rates and charges. What you see here in front of you on this particular slide is a comparison of the first 6 months of actual results in the middle column here, compared to the current year budget for the first 6 months and the prior year actuals for the same period. As you can see, operating revenues are doing substantially better than originally anticipated in the budget. We're performing 2.7 million or 15% above the year-to-date budget. Our airline revenues are approximately 9% above budget for the first 6 months. That is mainly due to our airline traffic outperforming budget quite substantially, especially when we look at the number of in-plane passengers for the first 6 months. Non-airline revenues are also outperforming budget by approximately 2 million. A couple of highlights here that I would like to bring up. Our car rental revenue is substantially outperforming budget, 85% or 1.4 million so far in the current fiscal year. Parking and advertising are also outperforming the original forecast. On the other side though, gaming and retail are trailing a little bit behind the adopted budget. All of our O&M expenditures, all of the major categories, I should say, of O&M expenditures are below budget. Non-operating income, typically what you would see here is interest income, PFC revenues, CFC revenues, and new this year is the CARES Act reimbursement. It's 6.3% below budget. Just to give you a sense of why that happens, PFC revenues are trailing a little bit behind budget, and the CARES Act reimbursement, we have collected so far 4.7 million. That is below the budget estimate, just taking 1/12 each month. That would be 6.5 million for the first 6 months. It wouldn't be a finance presentation without any charts here. So operating revenues, as I mentioned, year to date, so far for the first 6 months, 20.7 million. That is 15% above the approved budget. However, we're still substantially below the last year for the same period, 31%. Our operating expenses, 19.9 million for the first 6 months. That is 11% below the approved budget and also 10% below last year for the first 6 months. We still have 23.5 vacant or frozen positions at this time. That results in substantial savings. The airline activity for the first 6 months, I would like to talk both about enplaned passengers and also the landed weight. Enplaned passengers, approximately 480,000 enplaned passengers. That is approximately 29% over the adopted budget. However, as expected, we're trailing by 59% behind last year's actual results for the first 6 months. Landed weight is 12% over the adopted budget. And the current estimate for the cost per enplaned passenger is $9.33 based on the 6 months of actual results. Just to give you a sense, the budget estimate was 12.8. Enplaned passenger chart, as you can see here, the green line represents the actual results for the first 6 months. We have performed significantly above budget in some of the months for the first 5 months. And the last 2 months, December and what we're forecasting here for January, are trailing behind budget a little bit. For the month of January, you see here this red star represents approximately 71,000 enplaned passengers. That's the current estimate. We don't have all the results in at this time. The forecast was 946,737 enplaned passengers. Based on the volatility of the current year, we're not anticipating a change in the forecast at this time, not knowing what the future holds. Some of the budget watch items that we're looking at is the COVID vaccine rollout. It clearly has an impact on air traffic demand. Hopefully, as more people get vaccinated, our traffic, especially passenger traffic, will continue to increase. There's a supplemental CARES Act, approximately $2 billion, that we're still expecting some of the details to become public. So we have a better understanding, first of all, how much the RTAA is going to receive. And then also, we understand there's a concession relief portion included in that also has some restrictions. We continue to monitor our days cash on hand, holding strong currently at approximately 500 days. As I mentioned earlier, our revenues are outperforming budget by 15%, and operating expenses are 11% under the approved budget. Going forward, I would like to talk about the additional budget requests that were identified at mid-year. However, I would be happy to answer any questions if you have any questions on the previous slides that I discussed.
Alex, quick question for you, Richard J. here.
Yes,
You
sir.
mentioned that interest income is down. Is that due mainly to the fact that interest rates are historically low again?
I apologize, Trustee Jay. Interest income is actually up.
Okay. Okay,
Interest
great.
income is up and is part of the non-operating revenues. The non-operating revenues overall are trailing behind budget. However, interest income is outperforming. CFC revenues are also outperforming the approved budget. The two major things that are below budget are the PFC collections and the CARES Act reimbursement.
Gotcha. Okay, thank you very much.
Just a quick question, kind of piggybacking on that. How long ago, Alex, was it that we hired on the firm that's managing our investments? Has that been 2 or 3 years? Because I
Trustee
know that.
Giannulli, I apologize. I can't exactly remember the date
Okay.
they came on. I would, if I'm to guess, it would be 2 years.
That's, yeah.
But
'cause
I'm happy to look into it and report back.
No, I just wondered because I think we've had very good improvement on our interest income since we put those people on contract.
Absolutely, we did. Yes.
Okay, thank you.
Alex, I'd be interested to know what the thought process is on the vaccine rollout, or what is the airport anticipating the impact of that will be?
I can definitely look into that and report back unless Mr. Griffith would like to comment on that.
I can certainly try, Madam Chair. I think there's a growing expectation on the airline side that Memorial Day is really where we're going to start to see a resurgence of air travel. And so they're assuming February, March, April, May, the big supply of the vaccine that's being talked about, being pushed out, we see it in the news every day, really comes to fruition. And we get to 150, 200 million people through both doses of the vaccine. And they're looking at that, feeling like by the end of May, that consumer confidence is going to be roaring back, both through a combination of you feel more consumer confidence because you've received both vaccines and you personally feel more protected. Air travel is, of course, cleaner and safer and healthier than ever before. And that combined with a pent-up travel demand. And so, as long as we stay on track here through the spring, I don't disagree with the airlines. I think we're all hoping it'd be a little earlier than that. Maybe spring break, we might start to see a rebound. I don't think we're seeing that right now. I'm sure my air service team is on. We've had some frequencies pulled out of the market. You see airlines pulling back in March because in November, they were hopeful that March we would be further along. And it's just, as we all know, taking longer to get it out, but it is coming. We're slowly working our way through that. So I think we're all starting to really aim for the summer, and that as summertime, we hope to see big numbers. Not necessarily 2019 numbers, of course, but a lot bigger than what we've been seeing. So does that help you kind of?
Yeah, I was just, I was thinking the same thing, that the vaccine, as the vaccine got more and more widespread, that, people would have the confidence back, but I worry about the economic impact, on people being able to afford to fly for much longer than the confidence. I think the confidence will return faster than the economic ability to pay for travel.
Totally agree. And that's why it's going to be really interesting to see that when confidence is back, how much of our traffic are we actually going to get back, either by market or as a national total? Are we going to get back to 70%? And we've lost 30% because they just can't afford that family vacation this year. And maybe it's 22 or 23. And as the jobless rate goes down, we start to get back some of those leisure customers. It is totally speculation at this point. And it's going to be really interesting to see what we do get back this year. Of course, every year I think we'll get more back, but that initial bounce back will certainly help. I mean, anything above the 40% of normal that we're hovering around is going to help all these budget numbers and give us a lot more economic confidence. But it's never before charted territory. It'll be interesting to see what the summer brings.
definitely interesting. And it's interesting. It would be interesting. I'm sure we don't know, but it would be interesting to know if when they send out stimulus checks, if the airport sees a bump or not. Like that would be an
Right.
interesting comparison to see if that's how people use it, you know, to go see their family or whatever.
Right.
Alex, do you have anything additional?
Not on that subject. I do have the additional budget request moving forward from here. Yes.
Great, thank you.
Thank you. And before I move on, Trustee Giannoli, just so we get a sense of how fast time passes, there are actually approximately 4 years since
Oh,
the investment advisor came on board.
that's crazy. I would have guessed maybe 3, but not 4.
I agree.
Thank
I
you.
didn't
Yeah.
realize it was 4 years. Wow.
Yeah.
Thanks for looking that up, Alex.
Yeah. Thank you, Alex.
I have a great team here that helped me out with the text message. Thank you very much. Going forward, I would like to talk about the unanticipated items, and it's a little bit maybe misleading to use the word unanticipated items. These are items that most of them were brought forward in the current year budget process. However, due to the coronavirus pandemic, as you all know, we had major budget cuts, and some of these were brought forward now at mid-year. We do have, based on the first 6 months of actual results, we do have room to move forward with some of these additional O&M capital project and equipment requests. Some of these we propose to have them funded with general funds, so with RTA funds, and where possible, we would like to use the CARES Act funds just to make sure that we're able to maintain our internal funds. As far as the overall request is approximately 3.3 million, and I would like to go through them by category. So what you see here is the operating and maintenance expense item request. Starting off with the Air Service Department that brought forward a request for an additional $200,000. That is for air service and cargo development incentives. Just to give you a sense, this $200,000 is proposed to be funded using fuel tax money, so it's not exactly internally funded. Land size study that I know will go to the board this week. The $100,000 that you see here is a request from the planning department. And this is just the portion for the current fiscal year that we plan on spending in this year. There's the overall contract is approximately $300,000. Building maintenance brought forward a request for the cooling tower, filter descaling, and media replacement, $100,000 estimated cost. We added a new firefighter position. The estimated cost at this point is $50,000. My understanding is that recruitment is on the way at this time. Economic Development brought forward a request for $49,000 to cover consultant fees related to land development. And I also have 11 items here that I did not list separately. They're smaller values, ranging from contracted services, consultants, unfreezing an airfield mechanic, and a property specialist position now at mid-year. Overall, O&M requests, approximately $685,000, $506,000 of that being funded internally, and $179,000 we anticipate using the CARES Act funding to be reimbursed for those. Equipment and fixed asset requests, sanitation truck, water truck. Those are the main, or I should say the most expensive items that you see here. Both of those were brought forward during the budgeting process originally, but they ended up being cut. 50 wireless access points brought forward by Marty's team for $90,000. Replacement for a tractor, $77,000. Board automation system, $45,000. A replacement forklift, and also the Bobcat spray trailer, cardboard baler, and the air compressor. All of those are replacing aging equipment, and they all qualify for funding through the CARES Act. Also, I would like to mention, and I should have mentioned that when I started talking about the mid-year requests, is we have the internal team of subject matter experts. Should you have any specific questions on any of these items, that they would help me out with any specific questions. The overall equipment request is approximately 986,000, 851,000 of that being funded through the CARES Act, and 135 estimated to be funded internally.
Alex, can I ask you a question, please?
Yes, please.
I'm just sheerly curious. How do you guys decide what's funded through the CARES Act and what isn't?
That's a very good question. Our approach for this was, first of all, what would qualify for CARES Act reimbursement? And what we were told by the FAA is replacement of equipment, and for the most part, O&M items would qualify for reimbursement. What you will see on the next slide here are some of the capital projects that were brought forward. Some of those are related to maintenance or replacing of existing things, and all of those should qualify for CARES Act reimbursement.
So basically, if it qualifies, that's where we put it, and if it doesn't, then we don't. Is that the simple answer?
In this case, yes.
Okay, thank you.
Thank you. Capital improvement projects. As you see here, most of these qualify for CARES Act reimbursement. Starting off with the CBP roof replacement, approximately $500,000. We have some airside and landside pavement maintenance, slur seal, $430,000 for the airside and $238,000 for landside. Phase 4 of the building control system replacement, approximately $327,000. And the last two items that you see here, the wall repair and the fiber optic cabling, we're estimating that both of those would be paid internally and costing $75,000 and $30,800. The overall capital improvement project request totaled to approximately $1.7 million, 1.6 of that being funded by the CARES Act. This slide just gives you a summary of the funding need and then also the identified funding sources. As I mentioned, the overall need was approximately 3.3 million, 1.7 of that proposed to be funded. Actually, I apologize, 2.6 of that proposed to be funded through the CARES Act. Fuel tax, $200,000. CFCs were used for approximately $28,000. This was for a water line repair in the QTA that was an unanticipated expense. And the rest of that, the approximately $457,000, will be funded internally. What you see here on this slide, again, a similar table to what you saw on the first one. However, this is an annualized forecast. It compares to the current year adopted budget and last year actual results. We're expecting that the total operating revenues will outperform the current year budget by approximately 2.8 million. You see on the airline revenue side, there's no anticipated change. The reason being, we didn't make any changes to the traffic forecast, both for landed weight and in-plane passengers, resulting in the same result as the budget. Non-airline revenues, I increased the forecast for that by the 2.8 million. Just to give you a sense where that came from, the main areas are the car rental and parking operations. Both of those are outperforming significantly for the first 6 months. So we're making the assumption that as long as our in-plane passenger traffic is holding to something similar that we anticipated in the budgeting process, we should outperform budget by the end of the year. The O&M expenditures were performing below budget so far for the first 6 months. However, we just added over $600,000 through the mid-year, and not knowing exactly where the current year is going to end up. Some of the expenses are seasonal. That might be the reason that we're significantly below budget for the first 6 months. And we're just keeping the current year budget same as the current year forecast, same as budget. The non-operating revenues, I'm increasing the forecast here by approximately 1.2 million. The main reason there is the revenues that we're seeing from the CFC, and also forecasting a slight increase in PFC revenues by the end of the year. We anticipated CARES Act funding need of approximately 12.9 million in the current year, just to be able to keep our rates and charges flat. Overall, we're not proposing to change that at this point. As you see, we have the additional request for CARES Act funded items. However, because we're outperforming the operating revenue budget, and so far we're below the O&M expenditures, we're not anticipating a need for more than the 12.9 million. In-plane passengers, as I mentioned, remains flat at approximately 947,000. Landed weight, no change there. And also the signatory cost per enplanement, at this time, we're estimating to keep that flat at 12.8. However, we're hoping, and so far, every year we seem to come in below budget on expenses and outperform the revenue budget, which gives us the opportunity to remain moderate to low cost airport with the signatory cost per enplanement substantially below what you see here. Just to give you a sense of the budget calendar as we move forward, as I discussed here, the mid-year budget review, we have internal discussions at this time on the budget request for next fiscal year with all of the departments. In April, typically, we have the board budget workshop, and in May, the proposed budget, and hopefully the board adopts the budget on May 20th. Madam Chair, this concludes my presentation. I know I talked a lot of numbers, and I apologize, I probably went through it very fast. Happy to answer any questions at this time if you have.
Actually, it was laid out very nicely and easily understood. Can you remind me what the total dollar amount of CARES Act we received initially was?
Approximately 30 million.
Do any of the committee members have any questions or comments?
No, I just wanted to mention that all the work that was done on the front end by staff and the adjustments that were made, this could be a lot worse had those not be done. So I appreciate all that work and the continued monitoring that's going on. Thank you.
I was going to, Richard J. here. Alex, great job as usual. This is testament to, it's nose to the grindstone, working hard, good numbers here. We just have to, keep going at the pace we are, and monitoring stuff and knowing that eventually this is going to go away. And I think what we're doing now is going to make us even stronger going forward. So thank you very much. Great presentation.
Thank you.
Does anybody else have any other comments or questions? Alex, thank you so much. I really appreciate the detail. Darren, did you want to speak?
Thank you.
Madam
saw you
Chair,
raise-
if I may.
Yes, of course.
Thank you. I just want to commend Randy and Alex and our entire finance team, and honestly, the entire organization for as close to budget as you really could expect to be given this unprecedented time. I mean, we're on solid ground here. I think you can all see that. We're doing better than we expected in some areas. We're starting to to miss a little bit on our passenger count. Well, I think we'll be close this month, but the reality is after 6 strong months, we're in very solid position. And when you look how close this team actually is, last May and June, nobody knew what was going to happen, what the future held. I mean, it was the greatest unknown ever in this
So if you
business.
need something.
And we are so close here. It's just really a testament to the foresight and as Richard said, nose to the grindstone, deep diving on the data to try and predict the unpredictable. So I'm really pleased with these numbers. I think we're in really solid shape and look forward to our budget discussions for the next fiscal year, which will have more data to work with, and hopefully will be growing now in recovery. But I just wanted to echo your comments that this could be a lot worse, and I'm pleased. Thank you, Madam
Aaron,
Chair.
thank you. I couldn't agree more, and it's short of amazing, the work that the team has done. Thank you, Randy and Alex and the entire accounting team. You've always been phenomenal, but you really knocked it out of the ballpark on this one. So thank you both very much.
Thank you.
Welcome. Thank you.
Does anybody else have anything, or should I move forward?
Good.
Okay, that's going to take us to member comments, questions, and requests for future agenda items. Does anybody have anything they'd like to see coming up?
Good.
Not on my end.
I'm good.
Nat, are you good? Trustee Caroselli?
It's all good.
Perfect. Thank you very much. Item number 7. So these are our monthly administrative reports. Does anybody have any questions or comments on 7.1 through 7.4?
I think the presentation we just had covered a lot of those.
I
So
will-
I'm good.
Yep, I reviewed them and they all looked pretty standard. All right, then in that case, Lori, do we have any public comment?
We have no public comment at this time.
Okay, and so we are 10 minutes away from the planning committee. Art, would you like to begin right at 10, just before we all get off the line?
Sure, let's just start right at 10. Looks
Right
like
at
we're
10.
right
Okay.
on. Perfect timing for once.
Because you
Okay.
actually had the agenda set for 9:30 this time, didn't you?
It always says 9:30 or immediately following the finance committee.
Okay.
So we'll take a quick break, and Art, those of us that are on that committee, will see you back there. Thank you to everyone who came this morning and participated. I appreciate all the presentations and the hard work that goes into these meetings. So if everyone is good, we will go ahead and adjourn.
Thank you. Good job. Stay safe, everybody.
Thank you.